Pablo, good to see you doing. How you been? JP, good evening. Good to see you as well. How you doing? How you been? Pure, good to see you as well. Evening. How you doing? How you been? Coatus, good to see you as well. How you doing? How you been? Hi, Miles of CMF. Let's go. Today we have a lot of news to go from tonight's live, and quite a lot of interesting news to go from tonight's live. It's going to be a good one. Good evening, Miles of CMF. Manny, good to see you as well. How you doing? How you been? Let's go, GP. So let's do intro, disclaimer, and what we're going to be talking about tonight's live. By that time, everyone's tuning in for the first part. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. The episode that you're watching right now is episode 317 of the CMF Live. On Monday to Friday, you can tune to this live 11:25 p.m. London time onwards, where I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations, pretty much everything you need to know about. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And we also do live Q&As on this live as well, which means if you do have any questions, put it down in the comment section. More than happy to answer any questions you may have. So let's go through essentially what we're going to be talking about on tonight's live. We're going to be talking about the US and China situation that's going on right now, which made the crypto market space slightly staggered because of Bitcoin. Then we're going to be essentially talking about the US Federal Reserve on tonight's live as well, in terms of tariffs and essentially rate cut scenarios. We're also going to be talking about the SEC's delayed decision essentially is on the Grayscale Cardano ETF and the AVEX ETF. We're also going to be talking about tonight's live regarding the US labor essentially reports that have come out. That does also affect the market spaces. We're going to go through news regarding Michael Saylor on tonight's live as well. Yesterday, I revealed some information regarding Michael Saylor and MicroStrategy hiding essentially their wallets, which isn't good for transparency. We're also going to go through news regarding essentially Vance. JD Vance did a massive speech essentially at the Bitcoin conference, and he said quite a lot of things that the crypto space should be listening towards. We're going to go through also news regarding the chip scenarios essentially inside the United States. And we're going to be talking about regarding GameStop purchasing a tremendous amount of Bitcoin they're going to be doing. We're going to go through news, a perspective that's come out from BitGet, a new report on crypto wallets and how essentially they represent essentially everybody having their own version of a bank is what they're saying. We're going to go through news regarding Cynthia Luminous, who says the US military leaders are ready for some sort of a Bitcoin reserve. We're also going to go through news on tonight's live regarding BlackRock being the one that's pushing, by the looks of it, for Circle to go for IPO. We're going to go also through news on tonight's live regarding David Sachs essentially criticizing Elizabeth Warren, Senator Elizabeth Warren. We're also going to go through news on tonight's live regarding Grayscale essentially adding a new AI crypto sector to their fund, but also they placed XRP and Bitcoin in the same category. We're also going to talk about tonight's live regarding another real estate firm that's essentially just came forward and decided to tokenize their properties on one particular chain. We're also going to go through news tonight on tonight's live regarding the UK Financial Conduct Authority's next steps for essentially rules and regulations for the crypto space, and they're still trying to aim for London to become the hub of cryptocurrencies, and stablecoin regulations is what's coming first in London as well. We're going to go through news regarding Tether on tonight's live regarding withdrawing themselves from the EU. We're also going to talk about tonight's live regarding the US Treasury comparing Ripple's RLUSD, Tether's USDT, and Circle's USDC on their newest reports. And we're also going to go through news regarding perspective that's come out from Ripple's CLO on tonight's live also. And we're going to go through news on tonight's live regarding another company that's came forward and decided to boldly back XRP. So those are the news topics we're going to go through on tonight's live. Quite a lot of Ripple news, essentially China and USA news, Trump news, essentially market news, data news, perspective news, and partnership news, and investment news, essentially. Also not financial advice in any sort of a way, but just the investments of institutions in this play. Now, before we go through the news on tonight's live, and the first one we are going to be covering on tonight's live is regarding US and China, because that is essentially what's causing this staggered situation inside the market space. Well, before we talk about that, let's go inside the comment section first. So let's see what's going on in there. And also, Thank you so much, everybody from the CMF who has liked this live on X, retweeted this live on X. I'm getting notifications right now from X. Thanks so much to everyone who's liked this live, who's retweeted this live, and also put a comment outside, hashtagging anything you want. And thanks so much to everyone on YouTube who's watching right now, who's also liked the live as well. Now, before we go through the first news, let's go inside the comment section, and then we'll go straight into the first news. Hyper Sniper, good to see you. How you doing? How you been? Good evening, sir. Curtis, good to see you. How you doing? How you been? Hey, CMF, let's go. Come on, good to see you as well, brother. How you doing? How you been? Good evening, Professor Miles and the CMF family. Funky brother, good to see you as well. How you doing? Just liked and retweeted on X. Thank you so much for that, Funky brother. Evening, Miles and Crypto Peeps Semper, good to see you as well. How you doing? How you been? So, the reasonings of why today the market became slightly on the downtrend, not drastically, but it slightly came down. Peter's Messi, good to see you. How you doing? It's because of the US and China situation that's going on. I mean, US and China situations regarding tariffs impact the market space, but this is the newest one, which is regarding semiconductor chips, essentially that the US manufacturers produce, where now they're not allowed to sell them to Chinese companies or essentially China in general, which has caused tech stocks to slightly come down, which has also caused Bitcoin to follow their footsteps. So here it is. New tensions in US and China trade war. Trump issues a strong order. US President Donald Trump has taken a new step in a bid to limit China's essential capacity to manufacture advanced computer semiconductor chips. The Trump administration has ordered American companies that develop software used to design semiconductors to stop selling those services to Chinese groups. According to sources familiar with the matter, the US Department of Commerce has told companies such as essentially Candice, Synthes, and Siemens, which produce electronic design automation (EDA) software, to end their sales to China completely. This decision essentially was conveyed in the official letter sent by the Bureau of Industries and Security responsible for export control within the department. However, it is not yet clear whether all the EDA companies have received such letters. The move is seen as Trump's administration's latest efforts to curb China's ability to produce AI chips. The US is trying to slow down essentially the AI innovation that's happening in China by not selling them the latest essential chips or any chips in general. And the Commerce Ministry officials said exports of strict importance to China were being reviewed. In some cases, we have suspended existing export licenses or imposed new license requirements. And one official said, although the EDA software accounts for a small portion of the total semiconductor industry, it plays a key role in designing and testing new generations of chips. About 80% of the Chinese EDA market is controlled by Synthes, Candice Design Systems, and Siemens EDA. So about 80% of China's, you could say, what's backing China's AI community or AI innovation, 80% of that market space is essentially backed by the US, which the US is now going to stop backing China. In fact, the first restriction in this area was introduced during the Biden administration back in 2022. Obviously, for Trump doing this, people are going to most likely criticize Trump. For a fact that the Democratic essentially politicians or the liberal politicians are going to criticize Trump and saying he's not going to be creating a fair market space if he's just going to be, essentially bullying China regarding their AI innovations. But the reality of it is Biden also did this back in 2022. Not at this stage, but he also did it. At the same time, the sale of most advanced chips and design software to China was banned, but companies continued to sell products that complied with essentially export controls. So that is why the market space essentially today came slightly down, because tech stocks in America came down because they can't sell to Chinese manufacturers. It's a bit of a confusion situation that started, which when tech stocks fell, Bitcoin followed its footsteps, which is why we had the market slightly down today. Now, also, on top of that, the US Federal Reserve essentially adopts a cautious approach aimed at tariff uncertainty. So we're all expecting Jerome Powell to get off his seat for once in his life and do something right, which is what we're expecting is rate cuts. Are we going to get them? By the looks of it, Jerome Powell still not responding. The Federal Reserve's concerns highlights the potential vulnerabilities of the US financial system and the risk as essentially its perceived status as a safe haven. Fed officials raised concerns over market volatility and the broader economic landscape in President Trump's tariff policies. Economic vulnerabilities were noted in the minutes of their May 6th to 7th meeting that the notes have just come out today. Many participants remarked that the reports from their business essentially Contacts or surveys indicated that the firms generally were planning to either partially or fully pass on tariff-related cost increases to consumers. The Federal Reserve officials and Federal Reserve Fed participants observed as unusual economic combinations, raising borrowing costs, a depreciating dollar, and a falling stock prices. This environment signals a possible investor shift away from US essentially assets, which again could be seen as a positive for the crypto space. We're seeing as a alternative market space if investors want to enter into. Obviously, some investors will go towards gold because it's the ultra essentially safe haven, but some investors will decide to enter the crypto space, which could be seen as a positive in the long run. The tariffs are essentially reported to likely cause inflationary pressures, passing costs onto consumers. Fed members noted that businesses plan to transfer these expenses to the public. Experts highlight the economic uncertainties introduced by tariff policies, suggesting hesitation essentially in changing their interest rates. Historical market volatility during Trump's previous term is also considered. Caution essentially of current trends might expose weakness in private credit and equity markets. The Fed's cautious policy outlook aims to mitigate further risk and support economic stability. So the Fed was caught pretty much in a blatant lie. They said the last time Trump was essentially in power as a president of the United States, he ruined the market space. If we look back, Trump actually fixed the market space the first time as president. Second of all, the Fed is saying there's so much uncertainty and that the exports and essentially the consumers will be paying the prices regarding tariffs and so on. Well, there is one thing the Fed could do, their job, which is do a rate cut. No one's expecting drastic rate cuts from the Fed, but we're expecting at least a 0.25%, which will essentially help the market space. But, the Fed could do something about it rather than sitting there essentially and folding their arms and pounding like a child. Now, regarding the SEC, essentially what we're talking about. Regarding SEC is what we're going to talk about next, and which is regarding the delayed decisions that have happened once again regarding ETFs. The SEC has delayed other ETFs and AVAX ETFs. Just want to say one thing on a side note. XRP Wisdom Tree, essentially ETF funds, are being acknowledged by the SEC, which means they're looking into them. They haven't delayed them, they're looking into them, which is a positive for a Wisdom Tree, essentially XRP fund. Now, according to the latest developments, the US Securities Exchange Commission has reportedly delayed this decision on two proposed ETFs from Grayscale, AVAX ETF and Cardano ETF. The delay follows a similar pattern as regulators take more time to evaluate the ETF before giving any decisions. This was Grayscale's essentially effort to convert its existing AVAX trust into a spot ETF. However, the review is still ongoing and no final judgment has been made by the SEC as so far. And at the same time, the agency confirmed that it needs additional time to evaluate Grayscale's Cardano ETF application also. The New York Stock Exchange, Acura, a subsidiary of the New York Stock Exchange Group, filed essentially the application on behalf of Grayscale back in February 10th to list their shares of the Grayscale Cardano Trust under the exchange rule of 8.201-E, which covers essentially commodities-based and trust shares. Back on February essentially 20th, New York Stock Exchange Acura also submitted Amendment 2 to the application, replacing the earlier version entirely. The amendment proposal was later published for public comments in the Federal Register back in February 28, 2025. And according to the SEC, the agency must respond to such proposals within 45 days of publication or extend it to review the total of 90 days if it's necessary. The 45-day deadline fell on April 14th, but the SEC chose to extend the review to May 29th, 2025 to allow more time essentially to consider the application and related issues. But now, if it seems that the date has been extended further, the SEC always reviews each ETF proposal to ensure it meets the standards laid out by the Section 6B5 of the Exchange Act. This essentially includes checking whether the application protects investors and prevents fraud and manipulation. So the essentially SEC has delayed another ETF application, which is essentially the Cardano ETF application. If you're waiting for that, don't worry. I don't think they'll reject it in any sort of a way, to be fairly honest, not financial advice whatsoever, but I don't think they'll reject it. And regarding the AVAX ETF, that also got delayed as well. But on the other note, the XRP Wisdom Tree fund was acknowledged by the SEC, which means it wasn't extended, but they're now looking into it, which means they've opened up the file and they're reading into it to see if it's a yes or a no. Is it going to get rejected? Probably not either. It's going to get accepted either way. And it's also an indication of how close we are for the SEC case between Ripple to be finalized on paper by the judge. Now, US Department of Labor is what we're going to talk about next. Before we talk about the US labor market space, let's go inside the comment section first and then we go straight into that news, because this is a very, very interesting news, extremely bullish news that I'm going to be sharing with you next for the crypto market space, for the general crypto market space. So let's get started the comment section first, and then we go straight into that news. Good evening, Miles of CMF. Free and Feather. Good to see you as well. How you doing? How you been? Morning, Miles of CMF. Don't forget to comment outside of the live on X as well. Facts. Shelly. Good to see you as well. How you doing? How you been? Yes, CMF members. If you haven't liked the live, retweeted the live on X, or put a comment outside and hashtag XRP, hashtag Mega, hashtag whoever you want to. If you haven't done that, go and do that. Take 5 seconds out of the live just to do that. Come back in. David, thank you so much for liking the live. I just got a notification. Even Miles of CMF. Pierce, good to see you as well. How you doing? How you been? Hi, Miles of CMF. George, good to see you as well. How you doing? How you been? Good evening, Miles of family. Ian, good to see you as well. How you doing? How you been? So I don't know what that means, but this person, my internet just went off. Sky Broadband is BS. Lord, fuck. The show is fire already. Let's go, Curtis. Let's go. Semper says, is Ripple looking into buying any more major companies since Circle says no? Circle still hasn't said technically no to Ripple, but they are still pursuing an IPO. And today we're going to find out why they're pursuing an IPO no matter what. It's because BlackRock is behind Circle, pushing them towards an IPO. That could be an indication why Circle wants to go IPO no matter what, because BlackRock is telling them to do so. I mean, if you think about it, Coinbase technically owns Circle, and BlackRock is behind essentially Coinbase. It's pretty much like a loop. Could be the loop essentially that Cardano's founder was talking about, the monopoly mafia inside the crypto space. Now, this is one of the bullish newses you can pretty much hear, which is essentially the US Labor Department ends crypto restrictions for 401ks. There's quite a lot of actually news to go through on tonight's live, and some of them are extremely bullish. And this is quite one of them, to be fairly honest, because the US Department of Labor essentially announced today that the revocation essentially of its 2022 guidance that advised cryptocurrencies, that it essentially advised against cryptocurrencies in 401k plans, signaled a changing stance on digital assets. The US Labor Department essentially said back in 2022 that crypto is not really the best option for 401ks because they're too volatile, they're too speculative, and nobody should really go towards them. Now, the US Labor Department is ending that. And they're saying 401ks green lighted for all types of crypto, pretty much. The policy revision affects the investment landscape for retirement funds and may encourage a broader cryptocurrency adoption. In a policy shift, the US Department of Labor removed its 2022 advisory against cryptocurrencies in 401k plans. Previously, employers were advised to exercise extreme care regarding such assets. This move recognizes the growing credibility of digital currencies in essentially mainstream finance, which is brilliant. It gives more confidence towards the crypto space. The decision was driven essentially by Trump's administration, with key figures like Secretary of Labor Lurie emphasizing politicians should not be making the decisions for the market space. In other words, Senator Elizabeth Warren shouldn't be the one dictating how the crypto space moves. Lurie, the Secretary of Labor, U.S. Department of Labor, stated the Biden administration's Department of Labor made a choice to put their thumb on the scale, where essentially rolling back this overreach and making it clear that the investment decisions should not be made by fiduciaries, not the DC bureaucrats and so on. The Biden administration was pretty much the worst administration we've ever seen in history. I used to call the Biden administration circus freaks, because that's pretty much what they were. They were all, essentially potatoes, to be fairly honest. Immediate market reactions suggest optimism among financial groups as the decision potentially integrates digital assets into retirement savings. That's a tremendous market space. The removal of prior barriers could lead to significant shifts in the market portfolios and increased cryptocurrency investments. Economically, this shift aligns with the broader government policies that seek to embrace digital innovation within traditional financial structures. The long-term effects are yet to be measured through expert essentially anticipates accelerated adoption of cryptocurrencies in retirement strategies. Key to this development is the focus on empowering over the bureaucrats in titles essentially in determining assets diversification. This shift potentially transforms transactional essentially views on digital currencies and sanctioned financial plans, impacting millions of retirement servers across the country. Do you know what I love about this? The Labor Department didn't just remove this essentially and say everybody can put their 401ks in Bitcoin only. They removed the idea of telling essentially investors and so on, or retirement, some people who are retiring regarding their 401ks. They removed it and said pretty much green light for the crypto space. We no longer see it as an extreme place you should stay out of. Instead, they're showing that the crypto space is the space that you should be entering into. This is essentially signs of how close we are getting to that finishing line of regulations and the world completely making that shift to that digital space, when the Labor Department comes out and says that, pretty much saying to everyone that your 401ks are actually going to do quite well if you put them in crypto. Not what they were saying before, which is stay away, extreme caution. Now, and it shows credibility towards the crypto market space, which is what we want inside the crypto space. We want the crypto space to be seen as a mature space, not as a pump and dump space. Now, Michael Saylor yesterday said he doesn't want to show his crypto wallet. What an idiot. And his response on that matter was that he's scared that his wallet might get compromised. His Bitcoin wallet might get compromised if he essentially shows it to the whole world. And he said that Bitcoin companies should not have to show proof of reserves. And instead, we should just go by their word, or when they file in with the SEC, which they can still hide some things off. But the nightmare has started for Michael Saylor because Arkham Intelligence has found out which wallet belongs to Michael Saylor. So this discovery essentially brings the total publicly identified Bitcoin holdings of Strategy to $54.5 billion, covering 87.5% of the company's total assets, including those that are held in Fidelity's digital essential custody as well. Arkham is the first to publicly reveal this detailed breakdown of MicroStrategy's wallet. Saylor has consistently opposed revealing their wallet addresses, calling on-chain proof of reserves a bad idea, the compromised securities. During a sideline event before the Bitcoin 2025 conference, he compared it to publishing your kids' personal details online, saying it invites attackers, essentially attacks from attackers. I'll be very honest, if Michael Saylor was doing a speech and saying, if you reveal your Bitcoin address, hackers will get into your wallet. And he was talking to people who don't know what cryptocurrencies are. And the audience was just, filled with people who are beginners inside the crypto space. They will probably get shocked and say, wow, he's right. We shouldn't reveal all crypto address wallets. But it's a public address. And first of all, is your wallet that bad that it can become compromised by anyone? It's a public wallet. BlackRock isn't worried about, essentially, as I said yesterday, showing their wallet addresses on, but Michael Saylor is. I think personally it was the most ridiculous excuse he could have ever come up with, because if you're a person that's inside the crypto space, you know that he's talking out of his arse, to be fairly honest. The discovery brings the total public identified of Bitcoin holdings of Strategy to that $54.5 billion, which essentially Arkham revealed. Previously, Arkham had identified 107,000 essentially Bitcoin sent to Strategy's Fidelity deposits, which don't show up directly under the Strategy because Fidelity doesn't segregate custody accounts. They also tracked over 327,000 Bitcoins held in segregated custody accounts, including Coinbase Prime, clearly linked to the company's holdings. Arkham Intelligence has publicly exposed the secret Bitcoin wallet addresses linked to Strategy, MicroStrategy, directly challenging Michael Saylor's past statements that he would never reveal them. Just think about it for a second. Arkham Intelligence revealed MicroStrategy's Bitcoin wallets. Has MicroStrategy's Bitcoin wallets been hacked since Arkham has revealed their wallet? No. So what was that dumb excuse that Michael Saylor came up with on live stage, saying, if I reveal our proof of reserves, then we can get hacked? Well, Arkham just revealed your wallets. Did you get hacked? No. It's just, his response was extremely dodgy, is what it was. On X, Arkham Intelligence posted a bold message saying Saylor said he would never reveal his addresses, so we did it for him. The post also said that they had identified the wallet holding 70,816 Bitcoins belonging to Strategy. Now, this is better. We can track essentially MicroStrategy's wallets and see what their next steps are. Now, Vice President Vance addresses a Bitcoin 2025 conference in Las Vegas, is what we're going to talk about now. Bitcoin 2025 conference has been happening essentially in Las Vegas, and it's a massive crypto event. And we also had essentially other crypto events happening in Las Vegas as well. We're going to be having the XRP Las Vegas event and so many other blockchain events that are going to be happening in Las Vegas. Now, JD Vance went on stage and made some extremely bold, bullish claims for the crypto space. He actually said on one of his speeches that he said, this is not just about Bitcoin, and this was a Bitcoin conference. He said on stage, in front of a massive audience, this is not just about Bitcoin. This is about the decentralization. This is about digital finance. This is about DeFi space. This is about essentially health going on, tokenizations and so on. Essentially every market space, every category and so on going digital and so on. which is a clear indication that it's not just about Bitcoin. And that was the first part of his sentence, because it's not. Bitcoin is a part of what the future is going to become, yes. However, the other side is the other projects, which is essentially XRP for what the market space is in, as finance, which he essentially mentioned for DeFi or tokenizations. XLM is there, XDC is there, HBAR is there, AVAX is doing quite great things inside the crypto space as well. So there's a lot of crypto projects that are doing tremendous work inside the crypto space, which they don't get recognition for, but Bitcoin does, for being not to be essentially against Bitcoin in a certain way, but just stating the obvious and facts, which is sluggish and expensive. Also, if I'm not mistaken, MasterCard went on stage, and MasterCard's CEO went on stage and said that Bitcoin is faster than a credit card, which makes me to wonder, has he ever used Bitcoin for payments? Because as far as I know, if I do a transaction with my Lloyd's Bank, for example, it's definitely faster than Bitcoin, also cheaper than Bitcoin. And it raises quite a lot of questions. Honestly, why don't they just put Bitcoin in the store of value category and just leave it there? Why do they have to say, oh, it's for finance, oh, it's for tokenization? They can't do any of those things, to be fairly honest. But anyways, Bitcoin 2025 conference in Las Vegas saw Vice President essentially JD Vance affirm cryptocurrency's potential role, labeling essentially its significant movements and appreciating the audience energy. His speech underscored cryptocurrency's significance, suggesting essentially active public involvement in its development rather than resilience on bureaucrat decisions. Also, he mentioned that, they got rid of Gary Gensler and they'll get rid of anybody else who stands against cryptocurrencies. Well, there is one person who is, dodging essentially Brad inside the crypto space. We all know who she is. Vice President JD Vance addressed the Bitcoin 2025 conference, praising the gathering as more than a mere event, but a significant essentially movement in financial autonomy. Vance also emphasized the importance of public participation over unelected officials in shaping cryptocurrency's future. His remarks coincide with Bitcoin trading essentially somewhere near $108,000. Vance's statements at the event illuminated the growing recognition of cryptocurrency's role in financial markets, suggesting a shift towards essentially a greater exclusivity in the economic decisions. Attendees responded positively, aligning with essentially Vance's call for broader participation in policy discussions. The future of cryptocurrencies in this great country gets decided at events like this. And the future is going to be decided by people, by you, not by unelected bureaucrats. He stated, emphasizing the pivotal role of public engagement when it comes to cryptocurrency decisions. Market reactions to Vance's speech showcased confidence in cryptocurrency trajectory. No immediate quotes essentially from notable figures were recorded, yet the general sentiment echoed support for Vance's vision. Industry stakeholders view these statements as indicative of potential regulatory engagements happening. Experts essentially also said the projects that Vance remarks could precede heightened regulatory dialogues, giving essentially Bitcoin's expanding role in trading patterns the prospects of integrating cryptocurrencies into the broader economic frameworks, is plausibly highlighting its relevance in upcoming financial structuring for those interested in conferences and contexts. In the Bitcoin Conference 2023 also illustrated how such events serve as a networking and innovation hub. So a Bitcoin event essentially happened in Las Vegas. We had a lot of people making announcements on stage, and essentially a lot of CEOs gave their perspectives about Bitcoin in that space. But the biggest speech, in my point of view, was definitely JD Vance getting on stage and saying, we got rid of Gary Gensler. If there's anybody else like Gary Gensler, we're getting rid of him too. And also stating that this is essentially bigger than Bitcoin. Him stating that on stage was one of the essentially cherry on top scenarios, saying essentially, in a way, this is bigger than Bitcoin. Essentially, it's about DeFi, it's about DeFi and TradeFi and finance and so on, tokenization, everything else that comes with it. Now, moving on from that to GameStop. On the topic of Bitcoin, GameStop is acquiring $500 million in Bitcoin for their treasury. I mean, it's a great maneuver from GameStop, to be fairly honest. It was becoming kind of like old news. GameStop obviously came into fame because of that kitty cat person, but obviously when that faded away, so did GameStop with it. And there must be quite a lot of people who are still holding their stock. But interesting enough, after making that announcement, their stock didn't go up, and neither did Bitcoin. And it always is also because the market couldn't react due to the trade tensions between China and the US that's going on, and the semiconductor chips today as well. But here it is: GameStop $500 million Bitcoin purchase by CEO Ryan aims to diversify treasury and boost institutional adoption. Ryan, the CEO of GameStop, announced a $500 million Bitcoin acquisition, enhancing the corporate treasury, aiming to align with digital asset trends. GameStop has allocated $500 million to Bitcoin, as revealed by the CEO Ryan. This move aligns with prior strategies observed in the companies such as MicroStrategy and Tesla, emphasizing Bitcoin's essentially increasing institutional appeal. Ryan also described Bitcoin as better than gold, underscoring the objects essentially to diversifying their GameStop corporate treasuries. The initiative was funded through the proceeds from a $1.5 billion convertible notes, offering reinforcing the treasury resilience. They're pretty much following MicroStrategy's footsteps: borrow and buy Bitcoin. He said, "We believe Bitcoin offers superior resilience and upside compared to traditional stores of value. This investment aligns with our strategy to modernize GameStop and capitalize on digital asset adoption," said Ryan, the CEO of GameStop. "The impact on Bitcoin's market shows growing institutional adoption, potentially driving volatility on volume. GameStop's essentially strategy positions it among major public companies making substantial Bitcoin allocations, and this decision may reshape investor perception and enhance market dynamics, attracting essentially traditional financial participants to digital assets. Similar moves have historically triggered increased liquidity and volatility in the cryptocurrency market space." But as I said, the crypto market couldn't react to this positive news for Bitcoin regarding GameStop due to the US and essentially China of their semiconductor situations, where the US is not allowed to sell semiconductors for AI innovation to be happening in China, and they want to slow down China's AI essentially movements. And that is the newest letter that's been sent out by essentially Trump to stop this from happening. And that's why the crypto markets can react in any sort of positive announcements that's been happening today. But is this going to be a long-lasting situation? No, not really. Probably by tomorrow, the day after, the market will restore itself. If it doesn't by Monday, it will 100% it will. Now, unless more tariff situations happen on Monday. But tariff situations, trade situations, negotiations between two nations normally impact the market space 24, 36, 48 hours max, unless it escalates beyond that, where they're just going and headbutting each other. They don't escalate further. But normally 24 hours, 36 hours, 48 hours, the market will restore itself. Now, crypto wallets is what we're going to be talking about next. Crypto wallets are the banks of emerging markets. Now, a new report that's come out from BitGet. It's an interesting report. They pretty much are stating that anybody that holds a crypto wallet, they're pretty much their own version of a bank. A new report by BitGet Wallet shows essentially that users in emerging markets use crypto wallets for everyday payments, much more than those in developed worlds. Emerging markets are leading crypto adoption and everyday transactions. A new report by BitGet today that's just come out shows that BitGet Wallet shared a report detailing essentially how users across the world engage with their wallets. Notably, the report shows a rise in day-to-day use cases for crypto, especially in emerging markets. BitGet's report is based on responses from 4,599 wallet users. The survey respondents were segregated into three age groups: Gen Z, Millennials, and Gen X and older, and into different essentially global regions. Respondents were then asked how they use their BitGet wallets. For example, in Europe, most users were primarily essentially engaged in trading crypto with their wallets, with other 40% of respondents citing that this use case. The trend was also very different. In emerging markets, users from Southeast Asia and South Asia and Africa were most likely using their crypto wallets for essentially spending their crypto assets and sending their crypto assets to other users. Users in emerging essentially markets typically struggle with access to reliable banking institutions and payment providers. For this reason, these regions tend to lead with crypto adoption. At the same time, users from these market spaces are attracted to essentially earning airdrops and rewards due to their relatively low income levels. Also, according to the BitGet CEO Gracie, this shows a fundamental shift essentially in how users engage with crypto wallets. For this reason, BitGet plans to adapt to this shift by making their wallet more accessible for users who are not essentially crypto natives. They said in their newest reports, this report captures a powerful shift. Wallets are no longer an extension of the crypto ecosystem. They are emerging to a new age, a finance ecosystem. At BitGet, we've seen firsthand how users' behavior is evolving inside the crypto space. People aren't simply trading anymore inside the crypto space. They're earning, exploring, and interacting directly with Web3, often starting just with a simple crypto wallet. Interestingly, North America and East, essentially Asia, users were split between trading and sending crypto or spending crypto. However, the level of engagement in East Asia was essentially much higher, with 48% and 47% sending crypto and trading. At the same time, this was essentially the region where the long-term holding rate was the highest at 43%. So things, I'll be honest, are very changing inside the crypto space right before our eyes, where the crypto space and the early days inside the crypto space, it was all about buy, sell, buy, sell. And then it became about meme coins, which was pump, dump, pump, dump. And then we went back to essentially a mature crypto space. Then essentially the meme coin space started again, which went back to pump, dump, pump, dump. And now we're moving completely off that pump, dump scenarios. There are some people still inside pump dumps, but I don't know why. I mean, 2025, we're pretty much getting to the end of the year. They really want to be in pump and dump still. Also, fast forward to now, where we're moving to this mature institutional sector, regulation sector of the crypto space, where even the Labor Department is removing essentially the restrictions they had on 401ks and telling people, you can put your retirement funds in any crypto pretty much you want, which does show that the crypto space has matured from what it was, which was buy, sell, pump, dump, mature, then pump, dump, and now back to mature. Now, Cynthia Luminous says the US military leaders support Bitcoin reserve. I don't know how that really helps, but we're going to go into it. But before we talk about that, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or comments to make, put them down inside the comment section. More than happy to answer the questions you may have. So let's go inside the comment section first, and I'm going to go straight into the next news. This show is fire already. Let's go, Curtis. Semper says, is Ripple, oh, okay. No, Billo, good to see you, brother. How you doing? How you been? Adi says, good evening, Miles, and all CMF. I'm sure we're going to have another great live as normal. Let's go, Adi. Facts. Stormy says, hi, Miles at CMF. Good to see you, Stormy. How you doing? How you been? Greetings, Miles and CMF. Ray, good to see you. How you doing? How you been? YouTube agent says, should I start investing in crypto? No. If you don't understand what the crypto space is, then you should not be investing in anything. So, it's not financial advice in any sort of a way. But if you don't understand the crypto market space or any market space in general, don't buy anything inside of it whatsoever. If you want to understand what cryptocurrencies are, learn about cryptocurrencies, learn about the ins and outs, and then essentially, enter the crypto space whenever you're ready. Your decision when you want to go through is your money at the end of the day, not financial advice at all. What's the best crypto app or company? If you want to store your crypto, if you want to keep a track record of your cryptocurrencies, use CMC. It's completely free. It's on the App Store and Google Play Store, which is CoinMarketCap. You can track your portfolios, by manually entering your portfolios, your crypto assets into. If you want to essentially go and use an exchange, crypto exchange, you could use Binance, you could use Coinbase, you can use Uphold, you can use Kraken, you can use essentially there's a few other ones, BitGet you can use as well. You can use Bitwise if you wanted to. There's quite a lot of exchanges out there that are all have some licensings in different jurisdictions around the world. Just depends on where you're from. And if you want to, pretty much stick to that. And when it comes to the DeFi sector, that's a bit more advanced. If you're not pretty advanced inside the crypto space, I wouldn't recommend touching the DeFi sector. I'm reading about it first because DeFi is where the majority of scams will tend to happen inside the crypto space because it's slightly lawless compared to when it comes to exchanges. So I would say start with understanding what cryptocurrencies are, what wallets are, and so on. Then get CMC, and you can even learn on CMC as well. They have a learn section that's completely free. You can also essentially go to coinmove.one on Google. If you type in coinmove.one on Google, which is my own blockchain startup company, you can go learn about cryptocurrencies there as well. It's completely free. Anybody can go check it out. No charge whatsoever for life. Anybody could go and study there, and it's simplified as well. But yeah, there are so many things you can do inside crypto. But don't ever buy anything you don't understand. That's the worst mistake you can possibly make in your entire life. Not financial advice at all. Now, Senator Cynthia Luminous says the U.S. military leaders support Bitcoin reserves. U.S. Senator Cynthia Luminous has stated that American military generals are big supporters of strict Bitcoin reserves. The Wyoming lawmaker made the remarks earlier this week, essentially while addressing attendees at the Bitcoin 2025 conference in Las Vegas. According to Luminous, she has spoken to generals inside the United States who understand that economic power is just as important as military power when dealing with essentially aggressors around the world. She explained that this is why they strongly support the proposal of a Bitcoin reserve. During her speech, the Republican politician also revealed that President Donald Trump is supportive of her Bitcoin Reserve Act. The announcement follows essentially of the March 11th reintroducing essentially of the legislation by her and 5 other senators to add up to 1 million Bitcoins to the US Treasury over essentially 5 years. Referring to the flagship cryptocurrency as digital gold, Luminous called for the US to match its gold holding strategies for the proposal. We have about 5% of the world's gold in the United States in reserves. We need to have at least 5% of the world's Bitcoin reserve, she also said. The senator also connected the proposal to U.S. energy and industrial strategies as well. She credited China's 2021 Bitcoin mining ban for shifting operations to North America and highlighted President Trump's recent remarks urging the country to combine both. And just to point this out, again, there's no hate whatsoever when it comes to Bitcoin. Just to state the obvious. Just to state the obvious situation. Regarding what China did, it should raise questions on the thing that I said, not guaranteed whatsoever, but what I just essentially presume, which is that the senator, regarding essentially what she said, which is she credited China's 2021 Bitcoin mining ban for shifting operations to North America. As I said previously, China was the first one in cryptocurrencies, first one with essentially CBDCs, social credit system testings, crypto wallets, Bitcoin mining, and then suddenly China bans Bitcoin mining. All the Bitcoin operations quickly go to America. Just reminds me of that Roman Trojan horse story, if anybody remembers. Now, the senator also connected essentially the proposal to U.S. energy industrial strategy as well. She credited China's 2021 Bitcoin ban for shifting the operation to North America and highlighting President Trump's recent remarks, urging the country to combine both. However, she believes that a national Bitcoin stockpile is the ultimate way of securing geopolitical advantages. The 70-year-old essentially pointed to growing support for BTC reserves at a state level, claiming that they always have been the essentially innovations of the United States leading them through. She emphasized that 30 American states are considering the initiative this year, and Luminous highlighted that Arizona, Texas, and New Hampshire have already advanced legislations in 2025 aimed at holding essential cryptocurrencies as a strict reserve asset. New Hampshire recently passed the House Bill 302, allowing it to allocate 5% of funds essentially in Bitcoin and cryptocurrencies for diversification. Arizona's House Bill, also 2749, has established a stockpile funded through unclaimed assets and staking rewards instead of a direct state investment. Meanwhile, Texas is also advancing a Senate Bill 21, which proposes a state-managed BTC reserve stored in cold storage for security. And Luminous also essentially noted how the movement is happening globally. For example, the United Arab Emirates is getting exposure to Bitcoin through the American spot Bitcoin ETFs as well. And they're also heavily purchasers of, you could say, Saudi Arabia as well, purchased quite a bit of MSTR stocks as well. Another initiative mentioned involves the Czech Republic, which is exploring how to include digital assets in its diversified asset allocation through its central bank. Something interesting on essentially Czech Republic. Czech Republic originally wanted to create a Bitcoin reserve. The European Central Bank said no. And then they came back 24 hours later and said, we're going to diversify in all types of cryptos, which then the European Central Bank didn't reject too, but they rejected the idea of just Bitcoin. Now, BlackRock is what we're going to talk about next. So we all know that there are essentially sources claiming that Ripple wants to buy out Circle, which makes a lot of sense. Even Cardano's founder came out and said, Ripple wants to buy out Circle, might not be a bad idea because there's a weird mafia monopoly going on inside the crypto space with essentially Circle, Coinbase, BlackRock, which essentially if Ripple buys out Circle, they can have a hold of the situation and stop this weird mafia crypto monopoly that's happening inside of it. But now we know why Circle is pushing for that IPO no matter what. Because BlackRock is behind it. BlackRock Inc. plans to acquire a 10% stake in Circle's Internet Financials Ltd, apparently, forthcoming IPO, boosting market confidence in the USDC stablecoin. So now we know why essentially Circle is pushing for that IPO no matter what. It's because BlackRock is pushing them to do it. So this acquisition, I'm guessing BlackRock made this move because they know that Ripple wants to buy out Circle. Because BlackRock knows Ripple wants to buy Circle, BlackRock decided to come with some sort of announcement of they want to purchase a 10% share essentially in Circle when it does go full IPO. Now, this isn't confirmed in any sort of a way, but it might get confirmed, and which will show essentially why Circle is going head first for an IPO. This acquisition by BlackRock, the largest asset manager, marks a significant endorsement of Circle and cryptocurrency stability, potentially enhancing USDC's market position. BlackRock, the world's largest asset manager, is set to acquire approximately 10% of the shares in Circle's IPO. Circle, known for issuing USDC stablecoin, aims to rise up to $624 million through its offerings. This move is seen essentially as a strong endorsement of Circle's financial products and essentially stability. BlackRock's involvement highlights its deep ties with Circle, having managed about $30 billion of USDC reserves. Jeremy, the CEO of Circle Internet Financial Limited, stated, "As we continue to lead the conversion around stablecoins, adoption, and regulation, our forthcoming IPO marks a significant milestone for Circle and the broader fintech ecosystem." You can essentially Circle's Internet Financial Limited, led by CEO Jeremy, will issue shares during its upcoming IPO. The IPO also involves major investments from ARK Invest Management, eyeing a stake of up to $150 million. BlackRock's acquisition underscores the growing trust and legitimacy in the stablecoin ecosystem as well, reflecting that confidence in Circle's innovation movements. This acquisition from BlackRock is expected to boost confidence in Circle's strict plans, signal a strong institutional support. Markets are likely to respond positively. This transaction reinforces BlackRock's commitment to crypto, potentially increasing the level of institutional involvement and influence on digital currencies like essentially USDC. The financial implications of this acquisition are also significant. Increased demand for USDC can further stabilize its position in the market space. The deal illustrates a broader acceptance of crypto assets within traditional financial circles, with potential impacts on related cryptocurrencies and markets. Post essentially occurs, such as Coinbase's 2021 IPO, saw a similar surge in institutional confidence. BlackRock's actions recalls its previous Bitcoin ETF activities, underscoring its expanding role in crypto finance. Circle has historically attempted public market entries, including the aborted essentially 2022 SPAC merger. Potential outcomes of this acquisition are very noteworthy. Historically, such integrations can lead to market stabilization and broader adoption. As Circle aligns closer with traditional finance, this partnership could set a precedent, enhancing trust in crypto solutions across institutional settings. If Circle genuinely is coming out and saying they want to buy 10% essentially of shares of Circle when it goes essentially live, to me it's an indication of why they're doing it is because Ripple wants to purchase them out. You see, I'm guessing Circle couldn't get essentially Coinbase to throw an offer out, because I'm guessing Coinbase wasn't interested in purchasing essentially Circle, or it wasn't the right time for Coinbase to do any sort of big investments. But now we know, up to a certain extent, of why Circle is trying to go for that full IPO. It's because BlackRock is behind it. If it is true that BlackRock wants to buy 10%, we know why. And I think Ripple needs to open that wallet up just a little bit more for that purchase. But they couldn't get, I'm guessing, Coinbase to purchase them out in any sort of a way. But BlackRock apparently wants that 10% share. And to be fair, BlackRock does hold a tremendous amount of USDC. And if Ripple buys out Circle, which is USDC, Well, Ripple gets to dictate some movements on an asset that BlackRock holds a tremendous amount in. You can see maybe why BlackRock is pushing for that IPO to happen and why they might purchase 10% of Circle, because they know if Ripple buys Circle, which is USDC, BlackRock holds a tremendous amount of USDC. If Ripple dictates that company's movements, well, then Ripple can control that monopoly that's happening. The monopoly where BlackRock is controlling. Now, you got to hit him where it hurts, essentially. David Sachs criticizes Elizabeth Warren's anti-crypto stance and eyes a Bitcoin strategy. So David Sachs has come out essentially and said to the public that Senator Elizabeth Warren, as usual, is just blabbering with no essentially non-factual information, as she always does. Senator Elizabeth Warren, in fact, loves the idea of using misinformation articles from the Wall Street Journal and publicizing them as if they're factual information, which is, prior to her other statements where 98% of the crypto space is used by criminals, which then, according to Chainalysis report straight after, was about 0.1%, which then essentially, the Wall Street Journal edited that article to the actual numbers, which then Senator Elizabeth Warren still didn't use the correct article. Now, David Sachs reinitiated a heated debate over US crypto regulations during a Bitcoin 2025 conference that's happening in Las Vegas. He criticized Senator Elizabeth Warren's tough stance on digital asset industries, because we know where Senator Elizabeth Warren stands. Senator Elizabeth Warren stands with bankers. Some bankers, just want to point this out, some bankers don't like the idea of going into this digital world, because slowly, banks will become obsolete if they don't get involved inside the digital sector. So you can see where Elizabeth Warren stands, which is she's backed by bankers. She's not backed by the crypto space, she's backed by bankers. That's why she hates the idea of crypto and always tries to control it so it can't breathe. He criticized Senator Elizabeth Warren's tough stance on digital asset industries. Sachs, now essentially the White House crypto and AI Caesar, accused her of harboring a pathological hatred for this crypto community. According to him, Elizabeth Warren's campaign to clamp down on crypto could drive innovation offshore. It definitely can. It also seems like, she's in favor of China and not the US. But to be fairly honest, why doesn't somebody clamp down on her portfolio? Because her wages don't add up when it comes to her portfolio. According to him, Warren's campaign to clamp down on crypto could drive innovation offshore. Sachs warned that the US risked losing its leadership in blockchain and digital finance. And moreover, Sachs also urged policymakers to embrace a balanced regulatory approach. He stressed the need for a constructive dialogue instead of a fear-driven opposition. Besides, he noted also that many in the tech and finance believe over-regulation could hurt the US's competitiveness when it comes to other market spaces. It's true. Singapore is, very open to the idea of cryptocurrencies, and they've been essentially as a cryptocurrency handing out licenses, bringing out regulations, and even the ASEAN countries, which they announced 2 days ago, essentially, the 10 Southeast Asian countries are going full tokenization, full cross-border payments between each other. And also, essentially, the UAE being very open to cryptocurrencies and AI innovation and so on. And yes, if America essentially starts, clamping down on crypto once again, then they're going to lose every competition, which is why they need to stop listening to people like Senator Elizabeth Warren, and people need to stop voting for Senator Elizabeth Warren. Who votes for that person in the first place? Additionally, Sachs warned that the crypto companies may flee to friendly jurisdictions like Switzerland or the UAE or Singapore. Such a shift could significantly reduce America's role in shaping global crypto policies. During the fireside chat with Gemini founders Tyler and Cameron, Sachs discussed potential government strategies for Bitcoin's acquisition. He stated that buying more Bitcoin is possible, but only under strict financial conditions. Hence, the acquisition would require a budget-neutral solution. This means that no new taxes or increases in national debt. Sachs proposed reallocating underused federal funds from other programs to fund the purchase. So, for example, the funds, Elon Musk stopped from the US essentially wasting taxpayers' money, then maybe they should allocate that fund towards Bitcoin. Bad idea. However, the final decision lies with Commerce Secretary Howard Longton or Treasury Secretary Scott Benson. They must approve and find the required funding sources. Sachs essentially also emphasized that the White House already has presidential authorization for such an action, Pending departmental support, the crypto community continues to rally against harsh theoretics from lawmakers like Elizabeth Warren. Many believe it stifles innovation and discourages essentially investments. Moreover, regulatory hostility risks pushing blockchain pioneers away from the US. Additionally, the lack of clear and consistent rules create uncertainty. This situation also frustrates businesses and entrepreneurs trying to operate within legal boundaries. Also, critics argue that the US may miss out on the next wave of financial innovation if they do that. But obviously, they're not going to, because the US is not stupid to do this again in any sort of a way, because they got rid of Gary Gensler, they got rid of Joe Biden, and the entire circus freaks of Biden's administration. Now, what we're going to be talking about, moving on essentially from the debate between Elizabeth Warren and David Sachs to Grayscale. Hi, Miles the CMF. Peg, good to see you. So how you doing? How you been? Good day, Miles the CMF. Mike, good to see you, brother. How you doing? How you been? Now, Grayscale adds essentially AI crypto sector and places XRP with Bitcoin as currency assets. So Grayscale, first of all, creates a essentially AI crypto fund, you could say. But also Grayscale puts Bitcoin and XRP in the same category, which some Bitcoin maxis will probably hate and, you know, fold their arms and pander about it. But interesting move from Grayscale. But so here is the first part regarding Grayscale's investment. Grayscale Investment has launched a new artificial intelligence crypto sector, while also confirming the classification of XRP and Bitcoin as currency assets. The asset manager introduced the updates through a blog post, citing functional essential differentiations as basics for grouping assets within its priority crypto sectors and frameworks. The newly created AI crypto sector consists of 20 blockchains and blockchain projects that integrate artificial intelligence into their functionalities. According to Grayscale, the total market capitalization of these tokens reached $21 billion as of time of announcement, up from $4.5 billion in Q1 2023. This also represents essentially 366.66% increase in valuation, prompting Grayscale to recognize AI as a standalone sector within its classification system. Among the featured assets are essentially Tau, Render, WorldCoin, Story Protocol, Near, Theta. Other listed projects include IOS Network, Virtual, the Artificial Superintelligence Alliance (FET), along with Grass, Arkham Intelligence, Keto, Golan. Also include are essentially Akash, LivePeer, Venice, essentially Venice AI, Ather, IO, Elizo OS, and essentially AXBT. At the time of announcement, essentially these projects are doing slightly well for themselves. Held the largest market cap. Essentially, for example, Tau held the largest market cap at $3.8 billion with fully diluted valuation of $9.3 billion. And Grayscale stated that the grouping of these tokens into one sector allows investors to evaluate the performance of AI-related projects collectively and assess their allocation strategies more effectively. Now, the second part, which is where it gets very interesting. So yes, Grayscale AI fund, brilliant. Brilliant for the AI space, 100%, for the AI crypto space. Now, the second part is what I'm interested about regarding Grayscale's reports, which is this. In a separate classification, Grayscale placed both Bitcoin and XRP under the currency sector. Interesting enough, they didn't put Ethereum in their announcement or any other thing. According to the firm's framework, this category includes digital asset primary use for decentralized payments and a store of value. They're seeing XRP is in the same category of Bitcoin, even for store of value. Just to point that out, just once again, for anybody that didn't hear it in the back, Bitcoin and XRP in the same category of store of value by Grayscale. Bitcoin's fixed supply and function as a value, essentially preserving its asset, contribute to its classification. XRP, on the other hand, was included for its use in cross-border payments and its adoption by financial institutions for international processes. Grayscale's crypto sector's framework sorts tokens into categories just by how they are used. This way, tokens are not sorted by popularity. So Grayscale doesn't care about popularity. They care about utility, which that is why they've put Bitcoin and XRP in the same category. The way the tokens are now, essentially, the way the tokens are not sorted by popularity, but to illustrate what they do in the bigger cryptocurrency ecosystem. With the rise, essentially, of AI, Grayscale organizes crypto world into 6 groups: currencies, the groups that Grayscale has created, currencies, financials, smart contract platforms, utilities and services, and artificial intelligence, and consumer and culture. So Grayscale doesn't have a popularity essentially category, but they have a utility category for all those subcategories. And again, just once again, for anybody in the back that didn't hear it, Bitcoin and XRP in the same category of store of value by Grayscale. Now, moving on to a very interesting and very positive news for essentially AVAX, which is this. We're going to go to more Ripple news on tonight's live as well, but for now, let's just go into AVAX news. We'll go back to Ripple news as well. We'll go back to, there's quite a lot of news to go through. Now, AVAX is what we're going to talk about next. Before we talk about AVAX, as I said previously, this is live, which means if you do have questions or comments, put it down in the comment section. More than happy to answer the questions you may have. So let's go to the comment section first, and then go straight into the next news. Good day, Miles and CMF. Mike, good to see you, brother. How you doing? How you been? I can't buy crypto from Binance in the UK. This month I had difficulty to buy, but today I already can't. UK, I would say Uphold will pretty much be the safest bet. Coinbase also, you can do it as well, to be fairly honest. Uphold or Coinbase is good to go. On the safer side of exchanges, Bitwise, Bitget should work as well. Happy Pisces, good to see you. How you doing? How you been? Now, AVAX. AVAX has done a lot of good things inside the crypto space as well, which they don't get recognized or talked about often, to be fairly honest. But a real estate deeds, essentially, Bergen County digitalizes real estate deeds on AVAX's blockchain. We also heard about essentially DVLA about a few months back, essentially putting license plates, you can see, on AVAX's chain, because AVAX has this subnet green chain, which everybody loves, and the world is going, eco-friendly, to be fairly honest. And Ripple is leading in that direction as well, regarding being eco-friendly and zero carbon footprint free. Bergen County, in cooperation with Balcony Technology Group, is working on a 5-year agreement to digitalize 370,000 property deeds, marking a significant shift in record keeping. The project focuses on utilizing the AVAX blockchain for enhanced security as well. John, the county's clerk, essentially, of Bergen, emphasizes improving residents' experiences through simpler and secure processing. This initiative is about improving the lives of our residents. By digitalizing property records, we are making the process of property records, we're making the process simpler, faster, and more secure for homeowners by being essential on AVAX and businesses and for future generations. The project aims to streamline real estate record management, positively affecting homeowners and businesses. By using blockchain, data integrity and accessibility might improve significantly in the region. The tokenization aligns with a broader trend in real-world asset tokenizations. The rise essentially in cryptocurrency market sectors when it comes to essential tokenization is quite tremendous. Like AVAX suggests, economic optimism linked to blockchain applications. This project follows similar applications such as the Dubai Land Department tokenization platform on the XRP ledger, which we've talked about for the past 2 nights. Blockchain continues to revolutionize how real estate records are maintained. Dubai was definitely the first one to announce such a big move, and now we have another move coming from essentially a county that wants to digitalize on AVAX. Incredible. And again, they haven't chosen Ethereum, which everybody should have seen coming, because Ethereum is very, very expensive and very, very congested. Or they haven't chosen Bitcoin either, because for the same scenarios, very expensive, very congested. Now, also experts project an increased adoption of asset tokenizations, for forecast indicating significant growth, and the Boston Consulting Essential Group anticipates a market expansion of up to $18.9 trillion by 2023 for a tokenization market space. But also that number is increasing day by day, to be much fairly honest. Now, the UK is what we're going to talk about next. The UK Financial Conduct Authority. As the world is moving towards this digital future, with America essentially moving towards digital future, with Singapore, the UAE, Saudi Arabia, Kuwait, Bahrain, Qatar, Thailand, the Southeast Asian countries in general, Europe, regarding the MiCA regulations, Latin America is moving heavily into cryptocurrency as well. The UK has been moving at a snail's pace. And, well, things are changing, you could say, inside the UK. Because the UK is realizing that the US is getting closer and closer of accepting some sort of stablecoin regulations, which is why the UK is saying this now. The UK's Financial Conduct Authority seeks public feedback on a new stablecoin and crypto custody rules and regulations. The United Kingdom's Financial Conduct Authority, the FCA, has released a new regulatory proposals seeking input from public on its plans for stablecoins and crypto custody regulations. The FCA's press release today comes as a part of its push to establish a much more clearer framework for crypto asset firms operating in the country. The UK is also looking to finalize its regulatory frameworks for stablecoins and crypto custody, and to collect feedback from various stakeholders. The FCA described essentially the proposal as the latest milestone on the road to crypto regulation. Building months of industry essentially engagements and previous consultation rounds, the proposed measures plan to strike a balance between fostering innovation and ensuring market integrity and consumer protection. At the FCA, we have long supported innovation that benefits consumers and markets. At present, crypto is largely unregulated in the UK. We want to strike essentially a balance and support of a sector that facilitates innovation and underpins by the market integrity and trust. The rules would apply to firms issuing stablecoins and offering essential crypto custody services. Stablecoins, which essentially are designed to maintain a fixed value by reinforcing a fiat currency like the pounds or the dollars, are seen as essentially having a strong potential to improve efficiency in payments, especially for cross-border transactions, is what the UK is saying now. However, the FCA stressed that such benefits can only be realized if stability and transparency are ensured when it comes to stablecoins and when it comes to crypto custody. Under the proposal, regulated stablecoin issuers will be required to clearly explain how their assets are backed and managed. So let me just tell you this for a fact. Tether, in my opinion, won't be accepted inside the United Kingdom when the FCA comes out with their stablecoin regulations, because it clearly states that under the proposals, regulated stablecoin issuers would be required to clearly explain how their assets are backed and managed. Knowing Tether rejecting the MiCA regulations because they wouldn't be bothered to show any sort of proof of reserves or hold certain assets in EU banks just in case of a depegging situation, well, we know for a fact that Tether is going to get rejected from the UK now, in my opinion. Not financial advice at all, but if Tether rejected EU's essentially rules and regulations for transparency, they're probably going to reject the UK's one as well. And it's also the reason why Tether yesterday made an announcement that out of nowhere, Tether comes out and says, we made $5 billion investments in the US, just out of nowhere. They just came out and said, we made already $5 billion investments in the US. They came out with that random statement out of nowhere is because we're getting close to US rules and regulations for stablecoins. And Tether is scared just in case the US also kicks them out. Hence why they just randomly came out and said, we've also made investments in the US, don't forget about us. Custody providers will also need to demonstrate that consumer assets are secure and can be accessed at any time. Obviously, people that are essentially holding their assets on crypto wallets, that's another rule that's coming inside the UK as well. They would need to show that how they secure their system, so there's no such thing as, hacking or malicious attacks happening. The FCA also emphasized that measures are designed to reduce the risk and impact from failures in the sector. The regulator is also considering expanding its innovation services to include specific focuses on stablecoins in the move to support financial service firms, experimenting with the technology. The FCA is coordinating closely with the Bank of England on the stablecoin regime. The central bank will oversee stablecoins that reach a systematic scale. Sarah, the Deputy Governor for Financial Stabilities at the Bank of England, welcomed the Financial Conduct Authority's proposal and confirmed that the complementary consultation paper will be released later this year. For those stablecoins that expect to operate at a systematic scale, the Bank of England will publish a complimentary consultation paper later this year, including responding to industry feedback around allowing some return on backing assets. Also, she said, we continue to work closely with the FCA to ensure that the integrity of the UK stablecoin regime, including how firms transition within the regime, she added. The public has until July 31st, 2025 to submit comments, and the final rules are expected to be published in 2026 is what the UK is saying. As I previously, if any country that doesn't launch in 2025, they're going to be launching in 2026. And I said this back in 2024. As the Financial Conduct Authority, FCA, invites public feedback on new stablecoin custody regulations, the Bank of England has added weight to the conversation. In early April, the Financial Policy Committee flagged raising systematic risk tied to the rapid, essentially, expansions of stablecoins and unbacked crypto assets. The committee also emphasized the importance of robust liquid reserves to support redemptions, warning that poorly managed stablecoins could disrupt financial markets, especially if offshore sterling peg tokens gain tractions. This part is also very interesting because Tether keeps their reserves offshore. And the UK is already mentioning that if there are digital pounds of a stablecoin being stored offshore, rejected straight away. So that means that, interesting enough, the same thing the EU said, which they turned around and said to Tether, you have to hold some of your assets, some of your reserves with the EU banks. So we know you have reserves, and essentially our economy is safe from any sort of stablecoin collapse situations. And Tether said no. USDC said yes, which is why they're accepted and Tether's not. Which Tether just made announcements of, how can the EU say this? How dare they say this? It sounds very similar to Michael Saylor with his moronic opinion on. He's a very intelligent man. Just want to point this out. Michael Saylor is a very intelligent man, but he sometimes tries to play it like if other people around him are idiots for some reason. But regarding what the Bank of England has said, what the Financial Conduct Authority has said, what I'm reading so far is basically Tether is going to get rejected in the UK, guaranteed pretty much, because they keep all their assets offshore. They object to the idea of proof of reserves, showing that proof of reserves are holding their assets in the UK. They're 100% going to reject it, because if they reject the EU, they reject the UK as well. So you can pretty much tell that Tether will no longer be operating in the UK as well once the UK stablecoin regulations come out. Meanwhile, industry essential leaders are growing restless. Executives from Coinbase, Ripple, and Clearbank caution that the UK's tightening regulatory environments could drive innovation abroad as well. Delays in licensing and lack of clarity, particularly on stablecoin frameworks, are stalling product launches and capital inflows. Now, regarding the UK saying, we're going to later this year come out with that consultation paper in 2026, we'll put it into law. Once the US passes the law on stablecoin regulations, the UK will be spearheading that regulation, because the UK is already behind the EU. They're already behind Singapore. They're already behind Hong Kong, the UAE, Bahrain, Kuwait, Thailand, Vietnam, Philippines, Brazil. The list just goes on. The UK is pretty much at the bottom of the list when it comes to crypto regulations and innovation. And if America passes that law, the UK is definitely going to be spearheading, because otherwise innovation is going to leave the UK, and that's the last thing they want, because a record number of billionaires have already left the UK due to the high tax situation. And if we're that slow in rules and regulations, then everybody's pretty much going to leave. And all there's going to be in the UK left is immigrants, pretty much. The new ones. Delays in licenses and lack of clarity, particularly on stablecoin frameworks, are stalling product launches and capital inflows. Although the UK government has proposed new rules, implementation details remain vague, leaving essentially the future of the country's crypto competitiveness uncertain as others race ahead. There are so many countries ahead of the UK. They should be spearheading it once that regulation comes out for America. Now, I just want to point out one thing regarding Tether. And why I say it will get rejected in the EU is why it will get rejected in the UK as well, is because of scenarios like this. Tether has decided to withdraw its USDT from the EU MiCA regulation. So Tether, has just decided to completely say, okay, we won't operate in the EU. That's it, finished. I mean, you didn't, to be fairly honest, Tether didn't have much of a choice because all the exchanges pretty much delisted them, which meant the DeFi space was the only one that was using essentially USDT, to be fairly honest. So good on them for realizing it finally, that the EU doesn't want them. Tether has announced its withdrawal of USDT from European markets, a move confirmed by the CEO, who criticizes the MICA's regulatory demands at the Token 2049 summit. The exit marks a significant shift in European crypto markets, influencing liquidity dynamics. It also underscores the challenges presented essentially by a divergent regulatory standards worldwide, particularly affecting exchanges and investors in the region. Tether, essentially under the leadership of essentially Paolo, is disconnecting its USDT operations in Europe due to the MICA regulations. Paolo also openly criticized the regulations at the recent summit, emphasizing global liquidity priorities over regional compliance. Tether's basically said, we don't need the EU, we are bigger. He does really live in his own little world, doesn't he? I must protect our 400 million users worldwide, he said, not just the Europeans. Well, very soon, Tether's CEO is going to make a very different speech, and is going to say, I must protect our users, not just the Europeans, or the Americans, or the British. In referencing to submitting USDT to MICA and criticizing the regulations for being potentially dangerous to banks and restrictive to financial freedom, he's calling it. The man isn't transparent, and he's calling the EU out. Imagine that one. He's not transparent, and he's calling the EU out on that one. And he's making a statement of, I must protect our 400 million users worldwide, not just the Europeans. And that is why essentially we are withdrawing ourselves from the EU. I'm being honest, we're also going to get a very similar speech from Tether's CEO, where he mentions, I must protect our users worldwide, not just the Europeans, the British, and the Americans. The decision involves financial operational adjustments affecting European exchanges that list USDT. In response, these exchanges are aligning with alternative MICA compliant stablecoins, shifting liquidity from USDT to regulated successors like USDC. European markets experience a shift as USDT is phased out, impacting exchanges like Binance and Kraken. The focus shifts to alternatives such as USDC, which benefits from its MICA compliance, and others are stablecoin platforms for users. Market trends also indicate a decline in USDT transaction volumes in Europe, with USDC and other compliant stablecoins experiencing inflows. Exchanges face pressures to transition assets to maintain liquidity, affecting both market structures and investor behavior. Similar regulatory frameworks have previously led essentially to liquidity migrations, notably during China's exchange bans. Such events have reshaped market dynamics, directing essentially activity towards compliant platforms and stablecoins, impacting liquidity and user accessibility. Experts also suggest that the regulatory adaptations will chart the trajectory of stablecoin adoption. Historical patterns also show that enforced compliance drives innovation towards decentralized solutions, potentially redefining the landscape of digital finance. Good luck, Tether, to be fairly honest. But also, on the topic of stablecoin regulations, on the topic of stablecoins in general, the next thing we're going to be talking about is the US Treasury. But before we talk about that, let's go to the comment section first. As I said previously, this is live, which means if you do have a question or comment to me, put it down to the comment section. Now, let's go to the comment section first. Susie says, good evening, Miles, and all. Let's go, Susie. Good to see how you doing, how you been. Evening, Miles. What's the topics been about tonight? We've had topics regarding reports, discussions, trade situations, but at the end I'll do the brief of what will be talked about on tonight's live. Richard, good to see you as well. How you doing? How you been? Hi, Miles and family. Alex, good to see you as well. How you doing? But one of the biggest things we went through on tonight's live, there's still some other things to go through on tonight's live as well. But one of the biggest things we went through on tonight's live was regarding Grayscale putting XRP and Bitcoin in the same category of store of value. But no other crypto project was chosen next to it. Just Bitcoin and XRP in the store of value category by Grayscale. Hi, Miles and family. Alex, good to see you. How you doing? How you been? Which is a big blow to the Bitcoin maxis. No offense to Bitcoin maxis, but there's a big blow to Bitcoin maxis who say, XRP is never going to grow in value. But Grayscale thinks otherwise when they put it in the store of value category. Hello, Mars and CMF. Sorry, I'm just checking in. I lost track of time. Jeopardy's. No problem, Scott. Good to see how you're doing. Hi, Mars and family. Alex, good to see you. How you doing? How you been? Kali says, Miles, my opinion is that UK must stand against USDT as well. I think they're going to, because the USDT can't apply under those rules and regulations. They're already offshore in El Salvador, so that just raises millions of questions for the UK. The UK tends to reject essentially companies that are offshore companies as well regarding banking scenarios, like if they come from the Cayman Islands. Miles, why is the US considering Bitcoin at all if Tether earns 2.8 billion? The other question you should be asking is why are they considering it at all regarding the founder of Bitcoin? Fairly honest as well. But they haven't considered it yet. Trump technically hasn't given a green light to purchasing Bitcoin at all. That is why you keep on seeing Senator Cynthia Luminous going here and there and making speeches. And her latest speech is that American generals say, we should be creating a Bitcoin reserve, as if, their opinion matters of taxpaying money being used to purchase Bitcoin. But technically, it hasn't got a green light yet to be purchased whatsoever. Just that they have that fund because of all the assets they've seized. So technically, they haven't bought it at all. Now, US Treasury compares, on the topic of stablecoins, US Treasury compares Ripple's RLUSD with USDT and USDC in a new report. So the US Treasury has come out with a new report putting RLUSD, USDT, and USDC in the same category. By the way, there's a lot more of the stablecoins out there. And RLUSD is fairly new, but it's still in their reports because we're about to get a stablecoin regulation. And, well, it seems like RLUSD is very important, even though some people inside the crypto space criticize RLUSD's movements and say it's a token with zero liquidity. There's no point of ever using it and so on. But again, according to the US Treasury, they're comparing it to USDT and USDC in their reports. The same way people say inside the crypto space regarding Bitcoin maxis that essentially XRP has no value, but yet Grayscale put XRP and Bitcoin in the same category of store of value. So the US Treasury Department is giving stablecoins serious attention. And Ripple's RLUSD is now part of the conversation alongside industry leaders like USDT and USDC. In a recent presentation, the Treasury Borrowing Advisory Committee, the TBAC, the department compared the reserve structures and market rules of four major stablecoins: USDC, USDT, USDC, RLUSD, and PYUSD, which is PayPal stablecoin. The move comes as the Genius Act, which is the stablecoin act that's going to be passed, a proposed regulatory framework for stablecoins, nears approval in the US and the Senate. This act, if passed, could unlock trillions in capital inflows by providing legal clarity and setting a new standard for stablecoin reserve banking. Trillions will be added towards the market space. And the Treasury clearly essentially wants to understand what's backing these digital dollars. According to data from essentially December 2024 or April 2025 in USDC's case. And Ripple's RLUSD is currently backed by a combination of money market funds, which are about 36.3%, cash, which is about 27.5%, and US Treasury bills, which is 36.2%. And also just want to point this out to people out there. Stable coins, US dollar stable coins especially, that are backed, they are all pretty much backed by treasury bills, which means that the dollar gets strengthened because of US dollar stable coins. Some people don't know, some people don't want to accept it, that essentially stable coins are backed by fiat US dollars and treasury bonds, which means every time these, essentially, for example, Tether or Circle prints more USDT, more USDC, or they print more RLUSD, they're backing that with fiat dollars and treasury bonds, and treasury bills, essentially, which makes the US dollar fiat money stronger. That puts it fairly in balanced positions compared to rivals because they have broken it down. For example, Ripple's RLUSD being backed by market funds, 36.3%, by cash, 27.5%, and US Treasury bills 36.2%. For example, USDT holds over 65% of its reserves in T-bills, while USDC is heavily concentrated in money market funds, 88.8% of its reserves to be exact. PYUSD is entirely backed by reserve repurchase agreements, with nearly 96% of its holdings in that category, while AuraUSD's total resize is much smaller compared to USDT or USDC. Its inclusion in this treasury level comparison is big. They're saying even though AuraUSD is new and USDT is old and massive, USDC is old and massive, it's interesting that they've put AuraUSD in that category of what the US is looking at for stablecoin regulations. You can see why Tether came out of nowhere yesterday and said, we've already made $5 billion investments in the US. As if they're trying to buy their way in for stablecoin regulations into the US. They tell the US, we've made investments in your country, please accept us for your stablecoin regulations, is what Tether is pretty much doing with that announcement. I know Tether does quite a lot of things that most people will read and think nothing of it. But if you really read into it, it just looks like desperation, as always, from Tether. And then when they don't get their own way, they make a pounder about it and fold their arms and blame the EU, even though the EU just wants transparency. While AuraUSD's total essentially reserve size is much more smaller compared to USDT and USDC, it's very big that it's in the same category. It signals that Ripple is positioning AuraUSD not just as a transactional stablecoin, but one with compliance and transparency in mind. Critical factors for long-term adoption. The US Treasury report noted a trend that's picking up steam. Stablecoin issuers are allocating more of their reserves into US Treasury bills, which strengthens technically the US dollars, fiat money. With the Genius Act in sight and both it and the Stablecoin Act prohibiting interest-bearing stablecoins, the safest bet is to stick with T-bills and cash-like instruments, which Ripple, AuraUSD has, and USDT has as well, quite a lot of it. Currently, stablecoin issuers collectively hold around $120 billion in T-bills, Treasury bills. $120 billion they hold collectively together in T-bills. But that figure could explode to $1 trillion by 2028. That would make stablecoins a huge force in US debt markets, on par with major institutional investors. Ripple, if it continues to scale AuraUSD alongside its cross-border payment infrastructure, may become one of the major players in this new digital financial ecosystem. Today's stablecoin market is valued at around $250 billion, but projections from industry insiders like essentially coin funds David suggest that the number could reach $1 trillion by the end of 2025. $1 trillion by the end of 2025 for the stablecoin market space. That means that there is still room for AuraUSD to grow, especially this year. Ripple manages to link its stablecoin to XRP-based payment rails, central bank partnerships, or even EVM-compatible networks like the ones developing now. And given that this report comes straight from the US Treasury, it's a clear sign that the government isn't just paying attention, it's preparing for stablecoins to become a permanent of the global financial space. So twice, you could say Ripple's been mentioned in very, very bullish, essentially, reports. One from Grayscale, where XRP is in the same category as Bitcoin for store of value. And then the other one for the Genius Act that's happening inside the United States for stablecoins, which is going to become a trillion-dollar market space, according to some CEOs, by the end of 2025. And they're saying AuraUSD is definitely going to grow. And for AuraUSD to be mentioned alongside USDT and USDC in the Treasury report, straight from the Treasury, it shows you that if you're holding XRP, your future is extremely bright. Extremely bright. Now, Ripple CLO also, on the topic of Ripple CLO urges US SEC for clarity on crypto and investment contracts. So Ripple CLO Stewart has come out and has submitted a letter to the US SEC addressing a key question from Commissioner Hester Pierce, essentially known as AKA the crypto contract. This issue remains central in debate over how crypto assets should be regulated under US securities laws. The letter went on to essentially to the US SEC Crypto Task Force, led by Commissioner Esther Pierce. The response comes to a recent speech titled "The New Paragraph" that asked when a token becomes a security and should cease to be called one. The letter is intended to provide clarity on this issue for market participants and regulators. A digital asset should not always be treated as a security, argues Ripple's CLO letter. The letter cites legal writings of experts such as Lewis Cohen, who pointed out that the essentially routine transfers of most fungible crypto assets in secondary markets does not essentially make them a security. To clarify the point at which token loses its security status, his legal perspective is cited. Stewart referred to the 2023 court essential decision by Judge Torres in their case against the US SEC. The judge ruled that Ripple's sales of XRP to institutional investors met the definition of its securities offerings. She also found, however, the sales of XRP on secondary markets were not investment contracts. In addition, the judge ruled that XRP itself is not a security, despite prior sales being made to essentially investment contracts. According to the Ripple CLO, a safer harbor would assist market participants in differentiating the periods when the token is no longer under security obligations. In doing so, this clarity could support innovation and result in more stable regulatory environments. The letter, however, says a safe harbor would benefit regulators and the crypto industry by reducing disputes. The letter from Ripple CLO acknowledges the US SEC concerns about bad actors using gaps in securities laws to evade rules. However, it also argues that changes to securities laws should come from Congress, not the US SEC. Facts. Regulations should be coming from essentially Congress and senators, not Elizabeth Warren, anybody else but her. But they should be coming from senators essentially, and so on. Passed down from the Trump administration, who are all pro crypto, not the SEC dictating what steps to be taken. Stewart also said lawmakers are in charge of establishing new legal standards, and adherence to current law by the SEC would help reduce market uncertainty. Stewart warns that relying on vague terms such as sufficiently decentralized adds confusion towards the marketplace. The letter suggests that Congress should consider network maturity when deciding if a token remains an investment contract. Once mature, tokens could circulate freely without securities law restrictions. This position essentially calls for lawmakers to clarify the law rather than leave the US SEC to create new standards. The Ripple CLO encourages Congress to set clearer rules that reflect the evolving crypto market and protect investors. So Ripple CLO, in the most basic sense, wants Congress to step in and just go beyond stablecoin regulations, even though that's a brilliant thing, but just to go beyond stablecoin regulations and just bring the laws out. Why are we waiting for the SEC to read one document, read another document, and decide which one's better, A or B? In the US essentially SEC letter, Stewart also proposes a safe harbor for good actors in the crypto market as well. This safe harbor would offer legal protection to issuers and participants who comply with clear rules. It aims to reduce enforcement risk while offering compliance guidance. Stewart suggests that such a safe harbor would help market participants understand when tokens no longer carry that security obligation, and the clarity could foster innovation and provide a more stable regulatory environment. According to the letter, the safe harbor would benefit both regulators and the crypto industry by minimizing disputes. And Ripple CLO Stewart reaffirmed in his letter that XRP should not be treated as a security in itself. He warned that the vague terms like fully functional or decentralized cause more confusion than clarity. His comments highlighted Ripple's ongoing efforts to seek clearer and consistent regulatory treatments for XRP and similar tokens ahead of the US SEC decision on XRP ETF approvals. Now, we know for a fact that essentially SEC has acknowledged the Wisdom Tree XRP fund, not essentially, extending it, which is a good sign, and perfect timing for him to essentially send this letter through. But also, yes, senators essentially should be the one that are passing the laws, and then the SEC should be applying that law, not the SEC trying to figure out which is the better option. Because although the SEC has done tremendous work compared to what it was under Gary Gensler, they've done tremendous work so far. I mean, Mark, the acting chairman, did a brilliant job. But anyways, putting that to one side, yes, I agree 100% from Stewart. We shouldn't let the decision come up the SEC. We should just let Congress pass. Also, Ripple has funded quite a lot of politicians as well, which is a very positive thing for the rules and regulation side. Now, what we're going to be talking about next is Vivo Power. Why are we talking about a company called Vivo Power? Well, Vivo Power has taken a page out of Michael Saylor's playbook, or MicroStrategy's playbook, or Strategy's playbook, which is to create a fund or streak essential reserve asset for your firm. What has this company chosen to back its firm with? Is it Bitcoin? No. Ethereum? No. It's XRP. But more interestingly about that, Vivo Power is actually backed by Saudi royalty family. Just want to point this out. Under the Central Bank of Bahrain, when it comes to investments, just want to point this out. When it comes to investments in Islamic countries in the Middle East, like Bahrain, Kuwait, Saudi Arabia, United Arab Emirates, Qatar, in these jurisdictions, when it comes to investments, it also has to fall under their religion. Some jurisdictions force it, some jurisdictions are a bit more loose, but it still has to fall within their religion for the royalty families and so on to be getting some sort of investing into it. And XRP, a long time ago, under the Islamic rules and regulations, was passed a full green light by the Central Bank of Bahrain. And it's a public PDF documentation. And I said at that time, later on, essentially, we'll get every other Middle Eastern country approving in some sort of way, and then we're going to get the UAE accepting as well, pretty much next, and green lighting it. Which you fast forward to today, where essentially UAE has accepted it and green lighted it and so on for tokenization. That's another step or an indication of we're going to get more Middle Eastern investments happening towards the XRP ledger. And 2 days ago, we had essentially United Arab Emirates investing into the XRP ledger for tokenizations, governments. Now today, we're getting a company that's backed by the Saudi royal family going for XRP. 2 days after that UAE announcement. Vivo Power invests boldly in XRP, following the trail blazed by Michael Saylor's investments and tactics centered around Bitcoin. Vivo Power took a page out of MicroStrategy's playbook, but went for XRP instead. XRP coin is now drawing significant attention from comparable strategy intact by Vivo Power, a NASDAQ-listed, essentially, entity. The Canadian company's adoption of this approach comes after striking results observed from those who essentially emulated Saylor's investment blueprint, propelling essentially firms to establish formidable reserves in various cryptocurrencies. Michael Saylor's renowned method, the conception essentially of XRP coin reserves, aims to capitalize on potential price escalations. For Vivo Power, the aim is to create an opportunity that brings forth substantial gains for its stakeholders. Saylor's, for example, MSTR shares witnessed massive growth as Bitcoin price soared, essentially leading to a period of high interest and unprecedented stock value. With similar essentially aspirations, the establishment Vivo Power reserves and reaffirms the confidence in XRP's potential to yield favorable outcomes. Vivo Power saw XRP as a better potential to add to their company than Bitcoin, and they're listed as a public company as well. And they're going to do the same thing that MicroStrategy did with MSTR stock, with Bitcoin. Vivo Power is going to do the exact same thing and back essentially with XRP and their stock. And they're saying our stock will go up also the same way. Pretty much theirs did as well, as how we're seeing it. Vivo Power, backed by the Saudi royalty family and buoyed by a $121 million war chest, is poised to inject into the cryptocurrency market by focusing on XRP. This move sets a precedent positioning the company as possibly the first publicly traded firm with a substantial stake in XRP, led by a former Ripple executive. With potential gains perceived as higher than those of Bitcoin and Ethereum, the utility and growth of XRP hold intriguing essentially prospects for volunteers like Vivo Power. Recent developments have spurred essentially immediate market reactions with XRP, prices maintaining stability, while industry giants like Trump Media's essentially corporation look to establish large reserves of their own, and also the essentially UAE announcements. And global tensions and Bitcoin's fluctuations have contributed to challenging environments for immediate price movements. The concrete takeaways from this strategy include Vivo Power's significant investment in XRP highlights its high growth potential. The firm's leaders predict straight growth. Recent market stability reflects resilience and despite global cryptocurrency dynamics. Future aspirations for XRP's role in crypto sphere remain ambitious. Vivo Power's foray into establishing an XRP reserve exemplifies a bold leap into the realm of innovative cryptocurrency strategies. The venture builds anticipation for potential impacts on Vivo Power's market standing and the broader adoption of such a strict initiative across the industry. So today we went through some quite bullish announcements. One, Grayscale putting XRP and Bitcoin in the same category of store of value, even though people inside the crypto space will say XRP has no value. But to Grayscale, it does, because it's in the same category of store of value with Bitcoin. Two, essentially, XRP RLUSD being announced alongside USDT and USDC straight from the Treasury report. Three, a Saudi royalty company is going into XRP and backing with their stock, following the exact same footsteps that MicroStrategy did with MSTR. Those were the main bullet points on tonight's live, but we also talked about regarding JD Vance talking at the Bitcoin conference and saying, essentially, this is bigger than Bitcoin. It's actually putting Bitcoin to one side in his announcement and talking about how this is about the entire crypto space we're talking about. Typically, the Bitcoin conference is Bitcoin this, Bitcoin that, but JD Vance's comments suggested otherwise. If you're watching this for the first time ever, this was the CMF Live, and we have come to the endings of tonight's live. And so many things are happening for XRP. If you're an XRP investor, I'm telling you right now, your future is incredibly bright. Obviously, none of this could be financial advice in any sort of way. But from all the announcements, from all the partnerships, from all the contracts that are happening, and all the regulations that are coming through, all the companies or governments that are coming forward for XRP Ledger, it does show that the future looks very bright. And we're getting closer and closer to that finishing line of regulations. So, if you're watching this for the first time ever, this was the CMF Live. This was episode 317 of the CMF Live. My name is Miles, and the CMF stands for Crypto Mouse Family. You can tune to this live Monday to Friday, 11:25 p.m. London time as usual. And in this live, essentially, I talk about the most recent news that's happening around the world in terms of cryptocurrency, CBDCs, AI, politics, regulations, pretty much everything you need to know about the world transforming into a digital space. And just a breakdown of what we talked about tonight's live. Vivo Power, Saudi royalty company, going essentially for XRP. We talked about also on tonight's live regarding a CLO Ripple perspective on SEC movements and regulations. We talked about USDT, USDC, and RLUSD being in the exact same category. We talked about how USDT has just decided to remove themselves from the EU. We also talked about tonight's live regarding the UK's rules and regulations of stablecoins coming very soon. We went through news regarding a real estate company on AVAX. We also talked about tonight's live regarding Grayscale putting Bitcoin and XRP in the same category of store of value and payments. We also talked about tonight's live regarding David Sachs's criticism on essentially Elizabeth Warren. We also went through regarding news of BlackRock essentially wants to purchase apparently 10% of Grayscale's IPO. We also talked about tonight's live regarding Cynthia Luminous in terms of the US military leaders supporting this idea of a Bitcoin reserve. We talked about crypto wallets pretty much making you your own bank. We also went through news regarding GameStop essentially acquiring $500 million. We also went through news regarding the US and China trade tensions and their essentially computer semiconductor chips, which caused the market space to tumble slightly because Bitcoin follows essentially tech stocks. We went through news regarding Michael Saylor's wallets finally being revealed so we can see their proof of reserves by Arkham Intelligence. We talked about the US Labor Department ending restrictions on crypto 401ks, which means 401ks can now invest into cryptocurrencies, not just Bitcoin, any cryptocurrency. We also talked about on tonight's live regarding the SEC delaying some decisions for Grayscale and ETF for essentially Cardano and AVAX. And essentially, side note regarding the SEC looking into acknowledging the Wisdom Tree XRP fund. And we talked about the US Federal Reserve essentially the caution approach that they had essentially on tariffs and so on. Are we going to get a rate cut or not? It's still pending. But those are all the topics we talked about tonight's live on the CMF Live show. This was episode 317 of the CMF Live. incredible news that we went through on tonight's live. Honestly, the biggest store being, Grayscale, same category for Bitcoin XRP, a store of value and payments, and also the Saudi royalty company backing essentially XRP, publicly listed company. So, if you watch this for the first time ever, welcome to CMF Live. If you like this live, retweeted this live, and commented on this live outside live, thank you so much to everybody. If you're watching this on YouTube and you like the live as well, subscribe. Thank you so much as well for following. I'll see everybody tomorrow, same timing as usual. Everybody, honestly, have a good night and a good day, depending on where you're around the world. Before we do go, obviously, let's go inside the comment section first, just in case I don't miss anybody's comments. Miles, any words on Zebek? Yes, stay far away from as possible. I said this regarding Zebek. A few days ago, I said regarding Zebek, when everybody inside the crypto space suddenly starts talking about one particular crypto project, it will also suddenly disappear as well, which meant essentially stay away from Zebek. I continue to read and research. I'm feeling good about XRP, XLM, XDC, ACH, Algo, TON, and HBAR. What about your thoughts? Have it changed? Correct. No, it hasn't changed. XRP, amazing. XLM, amazing. XDC, amazing. ACH, brilliant. Algo, good. TON, good. HBAR, good. They're all good. Isn't USDC going away in Europe? No, USDC is staying in Europe. USDT is completely going. Let's go CMF. We are about to be in a place where we have strictly planning to be, and now we are close. Let's go and prepare this comfortable forever. Let's go CMF. Thanks, Legend. Night and day CMF. Shelly, let's go. See you tomorrow, same time as usual. Night Miles and CMF. Pablo, let's go. See you tomorrow, same time as usual. Good night, Miles and CMF. Thanks for the great facts. See you tomorrow. Free forever. See you tomorrow, same time as usual. Thanks, Miles. Have a good night. Or let's go, Stormy. See you tomorrow, same time as usual. Miles, you are bombarding us with incredible news. Thanks and good night. Let's go, Cali. See you tomorrow, same time as usual. Thanks for everything you do. Take care, Miles and CMF. Like, share, and comment. Let's go, Ray. Thanks so much for the kind words as well. See you tomorrow, brother, same time as usual. I will see everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. CMF, see everybody tomorrow. If you followed and subscribed, thank you so much and welcome to the CMF. If you liked and retweeted this live, thank you so much as well. Have a good night, Miles. As always, very entertaining and factual. Let's go, Scott. See everybody tomorrow, same time as usual. Miles equals integrity. Let's go, Scott. Thanks so much for the kind words, brother. See everybody tomorrow, same time as you. Everybody have a great day or a good night, depending on where you're around the world. And the disclaimer of this live, as always, has been not financial advice, not political advice, and whatever I say is only for entertainment purposes. See everybody tomorrow. Love and respect you, brother. Let's go, Scott. Love and respect you as well, brother. Let's go.